Hi, I'm Cody from Wall Street Breakdown. We're getting into earnings season and we're going to talk about one of the heavyweights that just kicks it off. I mean, there's just no two ways around what kind of powerhouse BlackRock is. This is asset management if asset management was on Trenbolone. There is no question about it. BlackRock's earnings per share, $5.92, beat the street as per usual by 36 cents. Revenues of $3.23 billion, beat the street by 140 million. Not a crazy beat, but up year over year, and this is for BlackRock again, up year over year, 13.7%. Now, let's first off just remember that all these numbers, all this stuff going up for BlackRock is in a time when the VIX is at its all-time low. Things aren't trading near to the amount that they were. So you're not getting near the amount of commissions passed through. People aren't changing their portfolio around too much. When everything's running, you don't need to make changes. BlackRock seems to find a way all the time, whether through iShares or somewhere, to just drive business. It's unbelievable what they do there. It's what a company. I can't say enough about a company run as well as BlackRock is. The operating income up 15%. Operating margins of 45% were up 20 basis points. Net inflows brought the assets under management to just shy of how much? How much? Do you want to guess how much the assets under management at BlackRock is? We covered Vanguard a little bit earlier. That's 4.7 trillion. BlackRock is just shy of $6 trillion assets under management. That lets you know that there's a few people out there that really trust what BlackRock's doing. They might have a couple of good ideas that they've bantied about that's turned people, like somewhat profitable. Kudos to you, BlackRock. I think you're doing a very good job. The iShares, they actually make up 27% of the assets under management and 38% of base fees. So they make good money off of iShares as of right now, but their passive strategies, index funds, the iShares ETFs, they make up 65% of the assets under management and 48% of base fees. So they're making a lot of money. Their active funds making up 28% of assets under management. I mean, they're making fees everywhere. Everything is growing. Everything at BlackRock thrives. I mean, to get into the company and to try to break a company down that holds $6 trillion in assets under management and touches into a lot of different industries would be impossible. So granted, this earnings call is very much a highlighted one. If you are thinking at all about investing in BlackRock, which is a solid company, I suggest you go speak to a licensed professional financial advisor. No two questions about it. Do your due diligence. Go ahead and read this full earnings call. Let BlackRock explain it to you the best way they can. And really go back, read some of the other earnings calls. BlackRock is, it's consistent as the day is long. This is a well-run company, a well-oiled machine. I have faith in BlackRock. I'm just going to put that there on the table, but I think you should do your due diligence properly and not listen to a guy on YouTube wearing sunglasses in the house. Come on now, but if you wanted a good earnings call, BlackRock beats on earnings by 36 cents, beats on revs by 140 million, and the revs are up 13.7% year over year, not to mention they hold just under $6 trillion in assets under management. BlackRock is running a tight ship. I'm Cody from Wall Street Breakdown. If you haven't already, subscribe button, notification bell, thumbs up, comment about BlackRock, or comment about anything you want. Today, I'm taking all questions. You have yourself a wonderful day.